I just had one of the strangest things happen to me on a client's office that's never happened to me in 40 years. I was doing a 3-day forensic analysis of a company, and we were at the first meeting, the very first meeting where I walk in, and generally, before I get the tour, before I do anything, I sit down with the owner and usually his team to talk about what's going on. I take notes, I ask questions like, what do you think is the problem? And then after the forensic analysis, figure out whether he was accurate or not. And by the way, no one has been accurate so far about what they perceive to be the problem. Anyways, that's not the point. Anyways, I was sitting down and he invited his bookkeeper, accountant, bookkeeper and the accountant and the general manager to join in on the very first meeting. And that's kind of unusual because generally I have to ask for people to join the meeting. But he had previously said that he's watched all my TikTok videos and he has a pretty good idea how we work, and he was specifically interested in the parts where I talk financials and stuff like that. So anyways, I'm going through going through some of the questions, and they're telling me about the business and how long they've been in business, and how long the bookkeepers and accountants have been there and stuff like that, and how much time they spend in the business. And I just asked, I thought I was asking very polite questions, very straightforward questions. And we got around to the financials, and the company is growing, but the profit seems to be diminishing. It's not keeping pace. It's not it's not 5 or 10% or 15% of the sales. The profits tend to be diminishing over the past 7 or 8 years. And I asked, well, why? I thought it was a very simple question, right? Why? Well, I don't know. I don't run the company, said the accountant. And I said, well, how involved are you in the company? Well, Leo, I'm an accountant. We do what the owner asks us to do, right? We prepare for taxes. We look at the financials and okay, what kind of reporting are you producing? Reporting? What do you mean? I said, well, how often are you showing the data? Well, whenever the owner asks for a report, we print out the report and we give it to him. And I said, the owner has to ask for it? Why aren't you just producing relevant information that the owner needs in order to make accurate financial decisions, accurate statistical decisions instead of emotional decisions? Yeah, but Leo, we're very busy. I mean, keep in mind we have a lot of employees. We're doing the payroll. We're paying invoices. There's a lot of accounts receivable. There's a lot of delinquent accounts. Our accounts receivable is also increasing. And I thought, well, there's two of you, right? There's the bookkeeper and there's the accountant. In this size company, that's kind of unusual to have a bookkeeper and accountant in this size company. So what keeps you so busy? And what kind of reports? I mean, if you were to produce reports, and I didn't raise my voice, but in hindsight, I did sound kind of snarky. I said, if you were the owner of this company, what kind of reports would you want from your financial staff in order to run the business properly, right? And he was kind of thrown back, and he says, well, I don't know. Well, how about you think cash flow projections might be a good idea to have in order to make decisions as to what we're going to do next week, next month? Yeah, I guess, but how are we supposed to do cash flow projections when nobody's paying their bills on time? Okay, who is responsible for reaching out to the people who are behind? Well, the bookkeeper. Okay, so how often are you on the phone calling these people? What is the strategy? What is the policy? Well, there is no specific policy. And I said, well, how about we create a policy? If someone is more than 1 day late on paying an invoice, an email goes out. The second day, no response to the email, there's a phone call. On the third day, there's another phone call if there's no response to the email and the phone call. Sounds pretty simple, right? So, yeah, but we don't have that policy. Well, I just gave you that policy. Write it down. It's policy, right? And you could clearly tell he was getting upset. The accountant was getting upset. The owner's just sitting there listening because he had an idea this was the direction this conversation was going, and that's why he had them in on this meeting. And I said, okay, fine. Now that we have a policy, let's get back on track. How often are you looking at job costing? What do you mean? Well, who's doing the estimating on these jobs, right? Well, the owner does. The owner does all the estimating. I said, okay. And what kind of margins are you putting into each project? Well, he told me it's between 30 or 35 and 40%. Okay, why are you adding overhead burden to the job as a percentage, and why not an actual number? What do you mean? How can you add an actual number if we don't know how many projects we're gonna do this year? And I said, well, why don't you know how many projects you're gonna do this year? And he was starting to get hot under the collar. But again, I was trying to have a polite conversation, but maybe I don't know how to have a polite conversation, because this really irks me, because people are being paid a salary to do a job, and bookkeepers and accountants get away with, with the M word. And I'm sick and tired of it. I've been watching this for 40 years, and very rarely do I, do a forensic analysis of a company, and the books are spotless. Very rarely, maybe 5 in 40 years. So what are these accountants and bookkeepers do? I mean, their job is to put numbers in boxes. So why aren't the numbers being put on boxes, and why aren't you creating reports so the owner can now make decisions based on accurate financial data instead of guessing, or instead of looking at the bank account and making decisions based on what's on the bank account? And meanwhile, you may have $100,000 in the bank account. Meanwhile, $120,000 are going out in accounts payable next week. How is that a way to make decisions, right? So I gave him that exact example, and he was getting defensive. And I thought, we need to step back a little bit here. The reason why, the net profit is shrinking, the reason why, there's a lot of stress in this company is because we don't have data. Why don't we have data, right? And he goes, well, Leo, sometimes we're answering the phone, sometimes we're dealing with stuff we shouldn't be dealing with. Then, okay, so if you're being taken off your job, then why hasn't that been brought up to the owner? Why are you the office manager if you're not supposed to be the office manager? Right? If you're not doing the number one job that you're hired to do because you're doing superficial crap, then stop doing the superficial crap so you can do your job. Your number one job is to find out what the numbers are, so we can, the owner can make financial decisions. And at this point, you could tell he was getting red. But I was just speaking a normal language. He stood up and he says, "I'm done," and he walks out of the room. And I go, "What do you mean you're done?" "I mean, I quit." He walks out of the room. I stood up, the bookkeeper stood up and walked out of the room as well. So I might have screwed up, but did I really screw up? If someone is on your team and not doing their function, not doing their job, why are you tolerating it? Right? I didn't ask him to quit. I didn't put pressure on him. I just asked some questions that the owner should have asked, or that the financial people should have asked. What would you have done differently? Please post your questions, comments below. Do you have a similar